The household debt in our country is now 40% of the GDP. To put that into perspective, India's GDP is now almost $3.6 trillion, and 40% of that is $1.4 trillion. That means the household loans in India right now are more than 1/3 of our GDP.
Indians are borrowing more than ever, resulting in staggering rise in household debt. From homes to smartphones, people are buying everything on EMI.
The rise of digital payment apps and personal loan apps has made it easy for people to take loans or buy products on EMI. So even when they don't have enough money in their accounts, they still buy.
This is just one part of the problem. Another major concern is the personal loan trap.
There are good loans and there are bad loans. Loans that add value to your life, like a home loan or an education loan, they are considered good loans. While credit card loans or personal loans are considered bad because they have very, very high interest rates.
When people are facing financial issues and don't have an emergency fund in place, they turn towards banks for loans. But traditional banks refuse to lend money to people who have bad credit scores. So as a last option, they end up taking personal loans. And once they are in this trap, it becomes difficult to come out of it.
Today, many apps offer easy, no collateral personal loans. People often take new loans to pay off existing ones, creating a cycle of debt that leads to financial and mental stress. Even people who have a lot of money fall into this trap. One of our customers, earning over 50 lakh a year, still had zero savings. More than half of his salary was spent on paying EMIs. He took his first personal loan when he had a family emergency, then a second one to pay the down payment on his home. Then he purchased a car also on loan. He accumulated so many loans that his net worth went negative, causing him a lot of stress with no clear idea of how to get out of it. That's when he reached out to One Finance for his liability planning. We analyzed his overall financial situation and not just his loans. We concluded that along with getting him out of debt, we also need to build a strong financial future for him. We started with the loans. We looked at the prepayment penalties, repayment clauses, and interest rates on each loan, and found one loan which had no prepayment charges and also allowed part payment. It was incidentally also the one with the highest interest rate. We noticed he had enough life and health insurance, so we advised him to cancel an unneeded endowment policy to free up money for loan prepayment. Accordingly, we made a detailed breakdown of each loan EMI and how much amount should be allocated to every loan for repayment. This itself gave him clear actionables for the next 5 years. With our strategy, he'll be debt-free in the next 3 years instead of 7 years and save a staggering 11.5 lakh rupees in interest along the way. On the other hand, we suggested he use the extra money to create an emergency fund to protect him and his family against any emergencies in the future.
One must realize that navigating through such liability crisis isn't something one should tackle alone. A qualified financial advisor brings invaluable insights, personalized strategies, and much needed clarity to tackle debts effectively.
Bad loans have people trapped, but with the help of a qualified advisor and proper planning, it is possible to come out of this trap. At One Finance, we look at customers' overall financial situation and guide them to improve it.
Having qualified help by your side is crucial. If you have a lot of debt or just need to sort your finances, leave a comment and we will get in touch with you.